General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. I think my tea is too hot. No, it's not too hot. Week 4. It's really the end of the quarter. Let's do the midweek. See if we get an anchor, which I doubt because this week has been boo-boo. There is no anchor point. Definitely. Monday is still the high and low of the week. Wednesday's close. So from here, it's really no price. I mean, really, I still think my idea is still good for OTE then lower. It's just waiting. So Monday, then mean reversion. Framework hit rate. It's been good. We seeing it's not favorable for risk, so we don't risk. Any case studies? No. Even though this chop should be steady. Time frame context. This is week 4 in the monthly cycle. this month really hasn't expanded to even care to create a week. Expanded expansion mitigation signals. Consolidation. Decision quality is good. Not engaging in bad environments or trading in bad locations. Narrative framework and accuracy, doing good. Staying in tune with the market narrative. Experience success failure tag. Doing good with picking our shots and waiting for news really. Case study vault reference. No, it's nothing interesting. Today is the 25th. It was unclear. Sideline. Confidence is medium. Well, slow. We don't have no condition, none of this stuff, no anchor point. You gotta expect Thursday. Nope. Let's get this correct. Okay. It's really like it's crazy how it's just how tight it is. Even these 2 days, it's an inside day. That's gonna be the main difference here. Inside day compression. I think Tuesday's range should be the reference. So we really didn't take Tuesday's high or low at all. Yeah, that's crazy. Pause at Tuesday low. 2 target You really don't need to. Let me put this. Here, just to go up here. It's crazy how we didn't run Tuesday's holiday, but going here and then targeting Tuesday's high is beautiful because we got this. It's like low resistance liquidity run. Let's go to the next chart. Hold up. Still under this 200. Still really not taking liquidity or doing anything significant. We're not even really breaking into the new week opening gap. Today. Mm, yeah, equal highs, equal lows looking things. We can sweep Wednesday's low and then run these highs too, but the best possible price will still be lower. Tuesday's low. Sticking to the same idea. Seeing Wednesday low as a possible level to sweep and go higher as well. We really don't need Tuesday low, just a daily low. We do need a daily low. And I wanted to happen at a good time. I prefer Tuesdays though. Okay. Okay, we actually got this high, so that's SMT. And now I'm reminded that SPY was stronger on the buy, and Nasdaq was stronger on the sell. It did not close. Let's put it. Let's go here. It's a little bit more brighter. There we go. Too bright. Okay. Same idea here. New AM session. We in a better position for the buy. SPX would be better to trade. Based on Kai. And Thursday usually caps weekly range. Let's look at the daily. Yeah, nothing stands out here. Same thing as Nasdaq. Let's look at the stocks. SPY. Look at the H1. H1. 30 minutes. This is interesting. You see the respect, but not the retest. And note, it's not no inside day based on the actual stock. It's a bullish day. So stock's looking like it's trying to prepare a Tuesday low of the week. also note, yeah, pairs, P arrays, respected them. Bodies, those two levels. Bodies. Let's hold the price. Let's take a look. Just this one. It's crazy. The respect. This is being disrespected though. Bullish opening, but not the bearish. It's like a little. I'm still bullish though. Just for to tweak it up here. You need to retrace. QQQ. We touched the bullish order block today and flew, but we after this it was over. Really, and this looked like a sweep to go higher. These are the M30s. Yep. Okay. So here. Tuesday of the week. Stop. Because the order flow is still trapped. Yeah. Got those two. I wasn't expecting this chop. Patient. Let's see. Price leave Tuesday range. Okay. That's that on that. Y'all have a good day. Peace.